Just like the summer temperatures, the real estate market is on absolute fire. It's going gangbusters right now. Multiple offers are taking place. There's bidding wars. It's just crazy. And everyone's asking the same two questions, or I'm getting the same two questions over and over again is when is the insanity going to stop? When are prices going to stop going up? And how can this not be a bubble? Surely the market has got to crash. And those are some valid points that are being raised, and there's a lot of different opinions out there. So I'm going to throw my hat in and give you a couple of more. Give you a couple of more. A couple of more. Can't even speak today. Give you a couple more here. This is Andrew with the Andrew Smith team at EXP Realty. And those questions about home prices and bubbles and crashes are the most common questions I've received after the last few months. And I openly admit that the market's insane. And there's things going on that just defy the norms. And in many cases, they're reminding people of 2006, 2007, 2008. And the natural tendency to believe is that, oh my gosh, this is just overheated and it's going to crash. But, and you've heard it before, and I'm not saying this just to try and make you feel good, but the market right now is nothing like the market in 2006, 7, and 8. The funny thing is a lot of people giving predictions right now weren't even in the business in 2006, 2007, and 2008. I was. I went through that market. I dealt with the foreclosures. I dealt with short sales. I saw what was going on. And I will say it's not the same. So my goal today is not to try and convince you one way or the other on what is or isn't going to happen. But I do want to share some insights with you onto where we're currently at and why we got here and what's likely to happen going forward, just from what I'm seeing. And I do a lot of research on this. One of the markets I work in is here in Frisco, Texas. I'm going to use Frisco as the example, as there's a lot of people relocating to Frisco, a lot of people moving in. We've seen population and housing explode over the past several years. So it's a good benchmark area to use. And what I'm going to show you here can be applied to any market across the country. So let me just share my screen here and let's show you what is going on. Okay, so this screen that you're looking at here, I am looking inside of a trends section that I can pull up in my local multiple listing service. And what you're looking at right here, it's kind of highlighted. I'm showing this median sales price, and I've got this on a 3-year trend. And you can see that if we were to draw a trend line through here, it's fairly standard, not overly aggressive appreciation until the beginning of this year, right? Then it just absolutely explodes and goes through the roof. Let me take this out further. So now we're looking at 10 years. So this is a 10-year run right here on price appreciation. So going all the way back to 2011. And the reason I'm bringing this up is in this case, if I was to draw a straight line all the way through here to kind of show the trend, you can kind of see that it's following a fairly standard trend line, right? Again, not overly aggressive price appreciation until right in here, right? And then when you go up and down a little bit, then wham, it jumps up substantially starting in January all the way up to now. So why is that? Okay, well, one of the things that we've said before is when you look at bubbles and the definition of a bubble, I mean, it's semantics for what people say in many cases, to be honest with you, but the true definition of a bubble is when you have an overheated, expanding marketplace, fast appreciating prices, and it's not based on anything, right? It's not based on any formula. There doesn't seem to be any economic laws taking place. Nothing. It's just not making sense. And I know a lot of people are saying right now, yeah, well, kind of look at the real estate market. It's not making sense. And I agree with you, but bear with me for just a second here and let me show you this. Okay, so I'm going back to the 3-year run here. So here's where we are on price appreciation. You can see this is the area that I'm really looking at right now, but just get an idea of this shape in your mind. One of the things, if you've seen any of the videos and read any of the blogs I've done over the past few months, we've been talking about this situation being caused by supply and demand, a huge imbalance between supply and demand. And this is not new in the making. This is not because of COVID. That has just accelerated it to a certain extent. But we've been underbuilt for housing for a long time in this country. For, this is the first year in the past 13 years that we're up above norms with regards to new home construction. And you've got all kinds of new buyers coming out. The millennial generation, the largest generation, is reaching prime home buying age. Not only that, one thing COVID did do is it changed the definition of home and where we work from. Okay, so the idea of remote work isn't going away. Yes, there's going to be opportunities to go back into the office, but having a couple of days from home, it seems to be that it's going to be more the norm, at least from all the people I've been talking to and all the reports that I've been reading. And not only that you can live further away from the office, in many cases, you can live states away because you only have to go in for meetings maybe quarterly, right? So all of that is playing into this, with the fact that we've had record low mortgage rates has rapidly increased demand. So let's look at this. Let's look at new listings. Okay. So when we look at this, as far as new listings, actually, let's look at just homes for sale. This will show it better. So here we are in Frisco again, going back 3 years. Right here, 784. We're up to 1,300. There we are at 1,200. And then since about April, right, of 2020, as the effects of the shutdown from COVID took effect, look what inventory has been doing. Falling, 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 falling. So look right here. Inventory hit its low point, right? Right here in January and February of this year. January and February of this year. If we go back here, when did prices start to skyrocket? January and February. Okay, coincidence? No, not really. So that's what you're looking at with regards to supply. Homes for sale in compared to pricing. So as the number of homes for sale dropped, let's go back to that again. As the number of homes for sale reached its low point, right here, okay, on this one, the number of homes for sale, I mean, look, February 173. We go back to February of 2018, 826, right? And this is just, again, this local market. What do we think the population's done in the last 3 years? Here, it's gone up substantially. So now you've got more people moving in, more buyers, and look how much less inventory you have, right? So now let's take a look at this. Let's look at percent of original price. What this is showing here, this is showing the average and the median are going to be just about the same on this one. So if we look at this, right, on this one, what this is showing, here's percentages up the side, and this is time frame here. So this is showing where homes were selling in relation to their list price. And you can see here, 95, 97, 97, all pretty common until you get up here into the second part of last year. Now they're up to 98, 97.8, 98, 98, 99. Right as we get to January, homes are at 100% of list price that they're selling for. What have prices done since the beginning of the year? They've skyrocketed. But what has inventory done since the beginning of the year? Continued to fall, right? So now let's look at what's happened in these months ahead. This right here is what's gotten most people concerned. It's where most people are thinking that we're in bubble territory. And I'll explain how this is going to work. But right here, here's what homes are doing. Now they're selling at 101%, 102.7, and you get all the way up here, and they're selling at 106.4% as of May. 6.5% over list price, right? That's the median, right? I know of homes selling for 15, 20% premium over list price. So what's going on, right? This is not sustainable by any stretch of the imagination. No matter who you listen to, this is not sustainable. So what's going on here? And we're already seeing this start to change in a few markets, but let me explain. You have, go back to our sales prices. Let's look at this trend line. This trend line is normal, right? When we get in here, if we were to extend that trend line out, it would be running right in this area here. So what's going on with this peak? Anything we've got above that trend line is where we're looking for potential adjustments to be made. And it's not a crash and it's not a bubble. But let me explain. You have a home that's listed for sale. I know of one just recently, not too far from me. It was listed for sale for $599,000, $599,900. That price, following that trend line, was probably a little high, but not much. Home was probably worth about 570, 575. A bidding war ensued. The home sold for 695. Okay, well above $95,000 above list price. So what happens? Now you get a neighbor that says, well, wait a minute, look what he just sold the house for. If he got 695 for his and my home is bigger, and of course I think it's a little bit nicer, mine must be worth 710. So they go and list at 710. Or they're not that aggressive and they list at 675. Still, in the period of 30 to 45 days, the market didn't go up that much. So you've got a lot of sellers saying, hey, this isn't going to last. We're going to take advantage of this. And they're listing high. For the people moving in, especially people moving, let's say, from California to Texas, they're taking advantage of a lower price point for what they're used to in California. They're coming in with a lot of cash or all cash in many cases. They need a place to live. From what they're used to, the price is worth it. They'll pay it. That will end up catching up. And what's going to happen is homes are being listed so far above that trend line right now, or selling so far above that trend line right now. We're already starting to see mortgage applications decline. We're already seeing in small pockets, even in parts of California, where you're not seeing the multiple offers. You're seeing buyers start to negotiate more. You're seeing buyers ask for more repairs, ask for a few more concessions, right? Buyers get to the point where they've had enough. And they're not just going to pay anything. They can't just pay anything. But what's going to happen is some of these sellers, they're going to keep listing and they're going to keep pushing that price point until in the end, what's going to happen is the home isn't going to sell. Now, I had this happen in my own neighborhood. It was a home that's for its size was listed way too high, right? Days on market is less than a week right now. This home had been on the market 23 days. That's not normal in this market. Why? They listed the house about $50,000 too high. They were trying to take advantage of what was going on in the market. And guess what? Nobody bought, nobody bid. There were no offers. And that price came down 20,000. Then it came down another 20,000. And guess what? It went under contract. So what you're going to start seeing as we go forward in this is you're going to start to see, especially in neighborhoods, and this is going to vary from neighborhood to neighborhood. What you're going to start to see is you're going to start to see price reductions. You're going to start to see those sales prices come down. Is that going to happen in the next month? No, it could be the next 6. Depending on where you live, it could be the next year. But you're going to start to see that shift. Then you're going to start to get people saying, see, I told you the market's going to crash. That's not actually a crash. That's just prices returning to the trend line of where they should have been to begin with. Granted, I'm not saying that the pace of appreciation is always going to be the same. In low inventory markets, the pace of appreciation is going to be quicker. But you're going to stop seeing homes selling for 100, 110, 120,000 over the list price. And those people that listed their homes way too high to begin with, you're going to start to see those prices get reduced. Do not confuse that with the bottom is falling out in the market. What that means is normalcy is actually starting to return to the market. So again, that's a lot of numbers, a lot of graphs. I hope that kind of makes sense. If you'd like more specific information, you'd like to discuss these concepts further, you've got a different opinion, let me know. I'd love to hear about it. This is what I think we're going to see going forward. It's not going to be a crash. It's not a bubble bursting. It's the over exuberance, the excitement is going to start to come out again in the months ahead, and prices will return back to a more acceptable level. I do not believe in most all markets that you had pricing here. I don't think it suddenly reset itself here to stay. I don't think you're going to see massive drop, but you will see the people that listed too high bring that back down. All right. So you are still going to see appreciation, but I don't think it's going to be as aggressive. It's going to come down. And don't get alarmed when you start to see a few price reductions going on in your area. Again, hope this helps. Please reach out with any questions and I'll do my best to answer them. If you've got another topic you'd like me to go into, please just write it in the comments below and I'll make sure that I record a video on that for you as well. Have a great one.